Then I want to go over my DeFi portfolio. I want to thoroughly go through what I have invested in DeFi through what platforms, how much I'm earning daily, and then how much I'm earning monthly, how much I have invested, and how much I have pending on the sidelines, waiting to be implemented into certain protocols once they mature. We'll get into that.
What do you feel about the AI agent niche coming into that time, bro, in terms of the regulations that'll be around? Because I've seen obviously some of the panel discussions that's been shared within the research chat, and I'm like, man, as soon as that time comes, or even the years afterwards, this is an area or a niche that is really going to make major movement, going forward.
Yeah, can I be completely honest with you, D'Angelo? You know what I think is going to outperform memes and AI agents?
What do you think, bro?
DeFi.
Of course, of course,
Yeah,
of
because
course.
because when because think about it, right? These large institutions still see these net niche categories in crypto like memes um and AI agents as extremely risk oriented categories inside an already extremely risk averse asset class. Okay. And so when the Federal Reserve cuts rates, global central banks all around the world are cutting rates. Rates are lower. What are larger investors going to be seeking? They're going to be seeking higher returns on assets that they hold. And that's going to come in the form of DeFi yield. So I think that DeFi protocols, for example, like Arrow, I think any protocols that have like a very mature DeFi ecosystem are going to be top performers in 2026, or maybe even towards the end of this year over AI agents. For me, it'd be DeFi, AI agents, and then memes in that order.
There's
Uh,
also too a Coinbase. I think it was a Coinbase and EY report too that was shared a long time ago in
yeah, I
regards to
got
what you're
that.
saying too. So, yeah.
I got that, bro. Hold on. I already know what you're talking about. I have such a good memory when it comes to research. Hold on, let me. Okay, sweet. Yeah, check this out. I know exactly what you're talking about. This one right here. Increasing allocations in the maturing market, 2025 Institutional Digital Asset Survey. And they surveyed 350 institutions, and the statistic here that they pulled was that the percentage of respondents that engage with DeFi is set to triple in the next 2 years, from 24% to 75%. That was one. And then you also have this gentleman here from Maple Finance. If you guys don't know what Maple Finance is, just go and do that research on your own behalf. But listen to what this guy says here. And
Meanwhile, you've seen the interest flip to now where you want to own the kind of the app because that's where the customer relationship is, which is where you can kind of charge revenue. And you've seen, I think, where we've tried to position ourselves is we think that DeFi protocols are going to outperform memes this year because I similarly to you, I think memes were an equal and opposite reaction to if you do a DeFi protocol, you get sued into oblivion. And so a lot of people then did useless, valueless meme coin tokens. But in a world where you can build real protocols that have real revenue and real businesses that are sustainable, I think there's going to be less oxygen for meme coins.
so, anyways, he goes on to talk about yield and when interest rates come down and whatnot, and how that's going to drive real demand for DeFi protocols as institutions that are looking to get off of the sidelines and come to the space are going to be looking to put their liquidity and capital to work in the DeFi and crypto markets. Then that perspective coexists with what this dude here said, Paul Brody, on this panel discussion. This guy here, Paul Brody, the global blockchain leader at EY. Let me find it real fast. Listen to what he says here. Pretty much the same, similar stance.
Obviously, DeFi hasn't recovered. If you look at the total money inside of DeFi, it really hasn't come back to its peak. I believe my theory for that is just my theory. My theory for that is that one of the reasons is we are in a period of higher interest rates, right? So why take the risk of putting something in DeFi because it's still relatively more risky when you can get 5% or 6% in a traditional bank account? I personally, my own forecast is that that is not a situation that's likely to last, right? Central bankers have promised us interest rates will come down, right? But I think in general, I probably do not agree with people who say that low interest rates, like zero and negative interest rates, were a temporary phenomenon, right? And my favorite example of this is this fantastic chart from the Bank of England. It's interest rates over the last 700 years. But what I would argue based on this data is that there are good reasons to think that zero interest rates or even negative interest rates are going to become the norm in the near future. And I think it has to do, and this is my techno optimism, I think it has to do with the fact that we are eventually going to become a post-scarcity society. But I think, as interest rates do eventually come back down, the search for yield is going to go back into overdrive. And then I think that's going to bring back DeFi with a vengeance.
Right. So I don't know. All throughout my investment career, right? When I pay attention to detail like that and I hear like more than one person with credentials say some shit, for some reason it clicks with me and I gravitate towards that. And that's just been one of the main theses behind how I've been able to accumulate so much in these markets is when I pay attention to stuff like that, I'm like, okay, more than one person with credentials are saying that, we should probably pay attention to it. So anyways, yeah, that was my mechanism behind why I have that perspective. It's not like I'm just waking up like, oh, I'm gonna tell everybody DeFi is gonna outperform. Like it's probably gonna be it like makes sense, right? In a low interest rate environment, what's gonna be one of the biggest niche categories in crypto with high demand, yield generation. And then on top of that, you look at everything that Ripple's been doing recently, just as an example, shifting their entire focus from remittances, cross-border payments, and XRP as a bridge asset to institutional DeFi, enterprise DeFi, retail DeFi. David Schwartz, even himself at Apex 2025, myself and Aqua played this video clip of David Schwartz specifically saying that he doesn't think that the next wave of institutional adoption is going to come from just random speculation. It's going to come from real world asset tokenization and DeFi and these large investors being able to put their money to work on sustainable, reputable DeFi protocols that provide and generate them passive income. So I just pay attention to stuff like that. It's up to you guys whether you do or not. But yeah, that's my perspective on that.
I think that's one of the great things about Apex. Apex was originally envisioned as a developer get-together, primarily for people who were building to share, technical insights and talk about strategy for, future development. And then it expanded to include retail XRP holders and people who are just enthusiastic about the space and interested in the technology. And I think the big change this year is that you see representatives of institutions who are looking to bring things like tokenized real-world assets onto the blockchain. And I think that's the big thing that's going to catalyze that next wave of adoption, that real mass growth that we're all hoping to see.
Talk to me about the innovation that's happening. And you're the co-creator of the chain, so I want to get into your head a little bit. What are some of the most important innovations that are happening on XRP Ledger?
I think that if we are going to see the sort of mass adoption of the blockchain space and DeFi broadly speaking, it's going to have to provide the kind of financial services that ordinary people need. Collectibles are great and speculation in very high risk assets is interesting. But if you think about what people need a financial system for, they need things like loans, they need payments, they need sensible investments, retirement funds, all of those kinds of things. And I think the most exciting developments are the ones that are going to build those pieces that we need for the DeFi and blockchain space to really take a bite out of that multi-trillion-dollar TradFi market.
From a technical perspective, what needs to happen for us to get there?
I think the big thing is being able to support things like tokenized real-world assets, portfolios of loans, fractional ownership, all of the sort of complexities around the real-world holding of assets. If we can do that, then I think we can compete with TradFi, and that's that's a multi-trillion-dollar market. It's hundreds of times the current DeFi market.
All right, cool. So let's go over my DeFi portfolio. The only thing that I did not add to this is, excuse me, my Magpie position on red, which is only sitting right now at about a $500 test position, and I will be probably later today, honestly, after this call, implementing the remainder of the money that I have invested into Red onto the platform, because it seems like it's pulled through over the last 24 hours. But just to go over this, all right? So this is my current DeFi portfolio. As I mentioned, I have de-risked the vast majority of my positions from liquidity pools. 95% of my portfolio is in staking. Okay. So with that being said, starting with my Scepter position and Flare. Right now, I have about $16,000 invested on Scepter. And the APY or APR, it fluctuates. Sometimes it's like 38%, sometimes it's 46%, sometimes it's 48%. So I just have it here on my portfolio at 46%. That's making me on average about $20 a day. Keep in mind that Scepter does not pay out every single day. It pays out, I think it's every 14 days or whatever. And so I'm not able to compound or excuse me, it automatically compounds by itself. Um, but pretty much all of these positions, I want you guys to understand that I'm just doing nothing with this money except compounding. So anything that I'm making from these positions, I'm just putting back on top of the positions, reaccumulating, buying in, and stacking bigger bags, right? Creating a snowball effect. So I'm just going to go outright and say, just with these numbers right now, my portfolio is probably going to be double, maybe even triple what it's worth right now next year this time, just by snowballing and compounding, even without price appreciation, it's going to be substantially higher just because of the compound effect. So right now, that's about $20 per day, about $607 per month, and about $7,391 annually. Again, depending on the fluctuations of that APR from Scepter.
Hey,
Um,
Cypress.
yep, go ahead, Vincent.
On that, with Flare and Scepter, are you periodically then going in and claiming and then restaking to it to compound? Is that how you're handling that?
Yes and no. There's been times where I have done that, but then also times where I don't do anything because it just does it automatically for you, right? So there's been times where I've taken some of the rewards and I've paid myself, or I've bought more Flare and like gone out and tried to experience different things in the DeFi ecosystem. But remember, Scepter is one of those platforms where you don't have to do anything. You just set and forget and it compounds it for you. So
Okay, all right.
yeah. Next is Exodus. Exodus, honestly, is probably my most favorite wallet. I don't know why. I just really, truly like the interface. It's super simple directly on the application. On Exodus, I have about, I think it's like 80,000 or maybe 84,000 XLR staked, which is worth about 26 grand. Um, and that APR right now is coming in at about 7.1%, which is about $5 per day, $153 per month, or about $1,863 per year. Again, nothing substantial, but just consistent buy pressure on my portfolio every single day at about 10:30 p.m. before I go to bed or shut my computers down for the day. I'll go on my mobile phone. That is a manual compound, so you do have to go in on Exodus, you claim, you restake, compound, do the same thing the next day. My next position is on Omnis Finance. That is my Aptos position. Right now, that is a liquid stake token that you get from Omnis Finance, which I'm not doing anything with. Um, I do have a small test position of like 150 bucks on RO Finance, but still just giving that protocol some time to mature as it just launched like a month or two ago or whatever. There's substantial amount of liquidity on that platform. Luke, I'll give you a chance to speak in a second. I just, again, because it only launched a couple months ago, I just want to give it time to mature, make sure nothing goes wrong with it. Give it a couple months, maybe towards the end of this year, before I take my liquid stake token that I receive on Omnis Finance, which is STAPT, and go and deploy that for lending on RO to earn an additional, I think it's like, what is it, Kev? It's like an additional 30% or something that you can get. And on my Omnis Finance position on Aptos, I have about $20,000 invested, earning about 7.7%, which equates to about one Aptos per day, which is about $4.28, $128 monthly, $1,564 yearly. And that platform is pretty much the same as Scepter. It compounds automatically for you. There's nothing that you need to do. It's set and forget. I think it was Luke first with their hand up, and then VML. You can go second.
Yeah, Cypress. What percentage of your bags do you stake? Like 50%, 60%? I was just curious.
Um,
What's a
it
good
re
amount?
it really just depends. I would have to go in and look at each percentage. So like I'd say almost half of everything that I have staked right now is half of 50-50. So like for my Flare, I have 2.3 million Flare tokens and 16,068 bucks that I have invested is about 1.1 million Flare, I think, off the top of my head, or something like that. It's like 1 million Flare. Same thing with my XLR position. I have like 160,000 XLR tokens and I have about 80,000 or 84,000 or something like that staked, which is $26,000. So it's like half and half. I have half staked, half in my cold storage wallet. That's just me personally right now. Um, so hopefully that gives you kind of a perspective.
Yeah, thank you, bro.
Yep. Um, and then VML, go ahead. Your mic is muted, VML.
Yo, I was just gonna ask, like, is there a reason like why you don't I guess siphon more of the money towards the higher yielding staking versus, the lower volume ones? Is it
Yeah,
is it just like asset based or is it uh APR based?
it's not, it has nothing to do with that. It has solely to do with with everything that's been going on in the DeFi ecosystem recently, starting with Kev when he got exploited on Cetus Finance. That was like my first wake up call to de-risk slightly from these protocols and not go full blown head on all my money from my cold storage into these platforms. After that, it seems like there's a lot of consolidation going on right now in the market, which we've expected for some time. Nothing out of the norm. You know, we've all expected protocols and all these things to be eventually consolidated, but I'm just trying to protect myself by taking a low risk approach. And in my opinion, that's what my portfolio consists of, is a more low risk approach. Even though there's still a certain aspect of risk to it, it's like I'm trying to take a very minimal risk approach. Then on top of that, I lost dollars last month. So you know, so I'm trying to just not overexpose myself by chasing high APRs
Respect.
and just being comfortable with, you know, like once I get to the full range of these numbers to show you guys what I'm making monthly, I'm cool with that, you know, and then just compounding that every single day, slow and steady grind and rise to the top. I'm here for a long time, not a good time, if that makes sense.
No facts. Thank you.
Yeah. I bet, but I mean, again, you know, it really just depends on your risk tolerance, man. Like, um, because for me, DeFi is not my primary source of income. For me, my primary source of income is trading. So I was like, okay, let me reposition a lot of shit in my portfolio. Let me de-risk. Let me continue to earn yield, not chase high rewards, still generate yield and make an attempt to mitigate my risk exposure. You guys might be different because for you, DeFi might be your only source of income. So you might want a larger portion of your portfolio allocated to higher APRs, taking on more risk. That might be the avenue of approach that you take. Just understand the risk that comes with that. Higher rewards always equates to higher risk. So, you know, just be mindful. I don't want to see anybody get wrecked because they're trying to chase 100% APRs, which are lovely until something hits the fan, you know. Eric first, and then I don't see a name. iPhone 164 can go second.
All right. So I had a question about shekel. So I've been trying to stake my position on Kosher Capital, but every time I go on Kosher Capital .net, it always freezes and then it gives me a flag as to make sure that this is the proper website, and then it completely shuts off. And I've tried this on both Google Chrome and Safari. So is koshercapital.net the correct website?
Yeah,
Or
yeah,
yeah,
the way that I go through it, the way that I go to it is just, I mean, you
mm,
can see right here, koshercapital.net,
yeah,
right? I mean, there's nothing different about anything that I'm plugging. I did notice though that sometimes the website does is a little clunky.
okay.
I use it on Google Chrome. I don't have any issues. What type of computer are you using?
MacBook.
Yeah, I don't understand why you would have an issue. Did you
Okay.
have you tried like Brave or Edge?
No, I haven't. I haven't tried anything other than those two.
Yeah, maybe try a different browser than Safari or Chrome.
Okay.
See if that works. Or outside of
All
that,
right,
I don't
cool.
know why that would be giving you an issue. I've never had any issues with it.
Okay. All right. Yeah. And Carlton, no, the security software is not blocking it. I checked that out too. But thanks for that suggestion. All right, man. Thank you. I appreciate it.
Yeah, yeah, yeah. It's always usually when you see something like that, it's always usually like some type of troubleshoot that you could do. Or maybe
Okay.
even have like pop-up blockers or something turned on or something,
Right.
something small.
Okay.
Yeah,
All right. Thank
yes.
you.
Yeah, something's blocking it. What specifically is blocking it? What's giving that message is really the question. So,
Maybe even like clear cache or something, clear the cookies or
Right.
something.
Yeah, I can
You
try
can
right now
do.
while I'm on with you guys. But all
Yeah.
right.
Okay, where do we leave off? Aptos. Okay, so Aptos web in the WebAuth wallet on XPR. I'm currently, um, I think I'm earning two on loan right now. I haven't checked. I have my loan staked, but it's like $1,000, so I didn't even add it here. I could put that down in the pending section. On my XPR position, $7,263 invested, earning about 4.5% APR. That's about 90 cents per day, $26 per month, 320, or sorry, excuse me, $26 monthly, $326 annually. Folks Finance, that is a protocol on Algorand. In my algo position, I have about $9,652 staked at about 5.54% APR. That is about $1.46 per day, $43 per month, $534 per year. Tap Exchange. Tap Exchange is a new protocol that I've been testing out on Aptos. I talked to you guys about it maybe like a month ago. And I told you that I was taking my liquidity off of Aerodrome because I was seeking some higher, more stable returns on my liquidity pools on stables. And then at the same time, diversifying, which at the time it was about $37,000 on Aerodrome that I had, that I kept fluctuating between different epochs on different liquidity pools depending on the yield distribution for that week. I was tired of doing that. And so I took all the liquidity off of Aerodrome. Nothing against Aerodrome. It's just a moving with the changing tides. I had been paying attention to Tap Exchange, and Tap Exchange in this USDT USDC pool has been pretty consistent. I've been in it for about 2.5 weeks now, and it's never gone below 25% APR. So I have about $20,000 in that position. It is a liquidity pool, so that is the only liquidity pool that I'm currently in. That makes me about $16 per day, $493 per month, and about $6,000 annually. On Kosher Capital, my shekel position, I have still about $10,000 invested on Kosher at about 10% APR. That's about $2.74 per day, $82 per month, and $1,000 annually. Tangem, directly in the Tangem wallet, I have my Solana staked. It's earning about 6%, albeit it says it's 6.63% or something like that. I just rounded it off to 6%. I have about $12,000 in that position, again, depending on the price of Solana on any given day. The last time I checked, it was about 12 grand. That's about $1.97 per day, $59 a month, $720 yearly. Figures markets, I've been testing for about 2 weeks now. It's been working great. I like it. I could actually up this yield percentage to about 9 to 11% if I was to go out and lend my YLDS into HELOC accounts. It does increase your yield to like 9 or 11% depending on the portfolio that you pick. But right now, I don't have it invested in the HELOC accounts. I just have it sitting in YLDS, which is the SEC regulated stablecoin that got approved in February. It is a KYC process that you have to go through. You can download the yields, or excuse me, the figures markets application directly on your phone. I personally like the interface a little bit better, the way that it looks on the web browser. But I have about $15,000 sitting in there, and that's earning about 3.50%. I think that in maybe like the next month or two, I'm probably going to ante that up and lend that YLDS out and earn 9 to 11% on that because that just seems a little bit more appetizing to me. But right now, that is earning about $1.44 or $43 per month, $525 per year. So in total right now in my DeFi portfolio and just staking in one liquidity position, I have about $136,000 invested. My daily income is about $54. My monthly income is about $1,637 and pretty much just staking or stablecoin pools, which is great for me. That literally, if I wanted it to, even though it's not, could cover my monthly rent, right? So that's awesome. And the total yearly income that I would be getting from this portfolio right now is about $20,000. Now,